So today I'm going to talk about front side versus back side of trading, of a trade, I mean. It's a topic that I think is going to be beneficial for many of you. I've seen in some of the mentoring sessions some ways that you guys trade your strategy that sometimes you're confused, not really knowing what to do, if you should be long, short, if you should be on the trade or not. So maybe this is going to help a little bit by knowing the distinction between these two, the front side and the back side. Many of you may do front side. I'll try to push a little bit more towards the back side. That's a little bit with more confirmation when you're looking for trades. So this as well is in alignment with what we have been talking about. Important levels of structure, support resistance, and maybe trend lines, and then as well the concept of finding space in the market, which is something that it's going to also help. If you have any questions along the way, just ask. You don't need to wait until the end. I'll be answering questions as you are asking. Just unmute yourselves and you can ask the questions. I'll be paying attention as well to the chat, but it will be, I may get distracted, not looking at the chat as often, so you can just unmute yourselves and maybe just ask questions if you have any. So yeah, so this is the agenda. What is it? Front side, back side. A lot of examples. I want a few practical examples with all of you. I'll be asking questions and then the conclusion. So basically, what is it? So usually this is going to be more, this is usually used more for reversal training setups, but you can also use it for trend continuation. Basically, if something doesn't happen, you can use it for the trend continuation. And vice versa. So front side trading, it will be kind of for trades before a shift in the market, and which is kind of you are anticipating or guessing what the market will do, while on the back side of trading, when price kind of is already reversing, so you are looking for trades after the shift has been done, kind of after the high has been done, and you're starting looking for short, or after the low has been done, and now you're still looking for the longs. Basically, you are going to be reacting to what price is doing, and you are going to be waiting for the confirmation before looking for the trade. So this is basically the big difference between both of them. And yeah, many of us do this, and this one just gives a little bit more of an extra confirmation, which is going to help with your overall trading. You're going to have a higher winning ratio. So basically, this is the example that I was just mentioning. Basically, during the front side, you're going to be looking for trades all along in this kind of, let's pretend that you're looking for sales. Maybe you're going to be looking for sales around this size. And on the back side, it will be kind of waiting for price actually to have a proper break of a low. And after that, yes, after that is kind of, we have kind of price gives the confirmation that is breaking, it's trying to start to shift. And this is when we are going to start looking for the sales instead of trying to anticipate and to catch the reversal when these highs are being created. So yeah, so this is basically the main difference, the two moments that you can be kind of looking for the trade on the left side and then on the right side. Yeah. So let's continue. So front side trading. So why do we usually look for front side tradings, right? Why do we are looking for this scenario? Sometimes one of the main reasons is because of FOMO, and some other reasons is also because you have a bias on the trade, on the setup, and because of that, let's pretend that you are expecting, for example, that S&P now is going to go higher and higher, and anytime there is a retracement to the downside, let's pretend that you are looking for longs. So we have that bias that maybe S&P or Bitcoin is going long, it's going to go to the upside. However, we still didn't really have the confirmation that price may want to go higher, because maybe at this point, let's pretend that S&P or Bitcoin, doesn't matter, is just creating new lower lows. So we haven't even kind of either break a high or even the trend line to even give us an indication that actually price is ready to shift and to go higher. But because we have that bias that price wants to go higher, we just keep going long. So it's good to have your bias, it's good to do your analysis. However, wait for price actually to give us the indication that what's to do. So let's trade the chart and not just your bias, right? And then the FOMO as well is, of course, if you are expecting that Bitcoin is going to go higher, and because you don't want to miss out on that opportunity, you're going to start going into the market too early. And not really waiting for price to actually show us the indication that it wants to move to the upside. One of the advantages of the front side, so especially when price is now approaching an important level of structure, for example, support and resistance in a higher time frame or an important trend line, is that sometimes price will just react from there one time. And let's pretend that we have kind of this level in here. And okay, this was kind of a support, a resistance, then becomes support, whatever. And then price, when it's coming back in here, and sometimes maybe price is just going to react there really fast and then reverse. And if you actually, in this moment, if we actually wait for the confirmation, maybe it's too late, we're going to miss a trade. So this is maybe the only moment that we actually is maybe a good timing to look for this front side trading, like to look for maybe just set up a 7-minute order in here, price touch it and goes down. And this may be one of the only moments that we should kind of do this, especially if this level is still fresh. So price hasn't reacted from here before. It has reacted as a resistance here, as a support, but now after break it, when price comes down. So this is still the first time back that price is doing. So there's higher chances that there are still orders somewhere in here. So price can actually touch there and go down. So this is basically one of the only moments and advantages that we have with the front side trading. If you actually are looking for that situation and actually catch a trade somewhere in here, my recommendation, it will be to manage your trade expectations, right? So it doesn't mean that just because price is reacting from an important level of structure that it's going to go all the way down, even break this low or even to this lows, right? You can just easily, if you have another level of structure in here, you can just easily go up, react from here, and just react from the next previous level of support resistance, and then after that, you can go to the upside. So manage your expectations when you're looking for this kind of setups as a front side trading. Again, if you pay attention to that concept that I explained before about space, look for that space that is available and don't really shoot for more than that as your own target. Yeah, so what else? So the disadvantages of front side trading, it will be, wrong timing to open trades, because price may just want to actually carry on to the upside and not really reverse in that specific moment, which is going to affect your winning ratio, which is going to be lower. So this is basically the main points of the front side. And now if we take a look at the backside trading, so the biggest struggle in this aspect, while on the front side it was a little bit based on FOMO and your bias, on the backside is going to be the struggle to stay patient and to wait actually for that setup to happen, right? It's kind of the battle between FOMO and being patient. This is a big struggle, a big battle in terms of our emotions as a trader, in order to actually wait for the right moment to then catch a trade when the shift is done, right? Instead of being too aggressive or being afraid of missing and you start looking for the short in here and here and here, it's just actually to wait, to stay patient, even after we see the low being broken. Stay patient, wait for the retest, for the retrace close to the highs, and look for your trade in there, or at least the retest of this previous level of resistance, now support, and look for your trade in there. Okay, and it's not that often that you're going to see price just touch it and reversing and never again coming back to at least give us a chance to try to re-enter. This can happen, but this is not how it usually happens most of the times. We actually have price reversing, going down, go up. So price will give us the opportunities to join the move as price is kind of now starting to go down in this case, building up the price action to go down. So yeah, being patient is one of the main struggles in terms of looking for the backside trading. Yeah, so after that, okay, advantages. Yes, we have a higher winning ratio, which is going to be great for us as well, because it's going to increase our confidence to look for more trades. It's going to filter some trades, because, for example, if you never have that break of a if you're looking for sales in here, if you actually never have this break of the low, most likely price actually just wants to carry on to the upside, and we avoid a short somewhere in here, because price never gave us indication that actually wanted to reverse. So we just save ourselves from one loss instead of looking for the sell. So that's perfect. It's really good to filter trades because we can easily just create this if-then scenario. If there is no break of a low, we don't even look for sales. If we actually then have a break of a low, maybe we're going to start looking for the sales. Or vice versa, if you have the break of the high, then we are going to start looking for longs after the break of the high. Okay, so this is a great example, and just like that, it helps you as well to find out, to decide if you actually what to do, right? So some of you text me or are telling me that doesn't really know what to do, like what to expect from price and so on, and it's basically this. If you start implementing this to your analysis, it's going to start helping you to be aware of actually where price may wants to go and what is actually doing. Again, it can help as well with the defined entry and stop loss, because if you are just catching those highs in here, you don't really still have a proper zone to place your stop loss, maybe just above the high, but you don't really know if this is the high. So it's going to be a little bit tricky. But if you actually have a break of structure, maybe then yes, you can already place maybe your entry here, your stop loss in there, and your target. It can be the retest of this low that was created, or the next low that price just broke it. It's pertaining to a series, so maybe somewhere in here could be our target, right? So you can kind of build up a strategy where you have a defined zone where you want to look for stops, where is your entry, and maybe where is your target, one of these two zones, and so on and so forth. So you can then combine the space that is available and so on. So yeah, this also helps in this aspect. Yeah, and then there is also different trade management strategies. For example, scaling into the trade instead of just opening one position when you are actually then reversing. Maybe as we start moving now down, anytime you kind of break a new low, maybe you can start looking for another short, and you can start adding into trades. Maybe your first sale was here, so you have one trade. Then price breaks a new low. You have maybe a second entry in here, maybe another low, and you can carry on like that. And of course, managing trades, maybe as even before you open the second trade, you already close some profits from the first one. Maybe even before then you open your third trade, maybe you already close some profits as well from the second one. You already move your stop loss to break even. So this is more advanced trading strategy of trade management, how you manage your trade. But it's a possibility as well that you can do after we are in the backside of the trade, of the reversal. So basically only disadvantage of a backside trading is going to be basically the only beneficial of the only advantage of the front side, right? It is maybe if price actually just reacts from there and goes away without even any retrace, okay, you are going to miss this trade. And that's basically the only disadvantage that you have with the backside. It's going eventually you need to be okay with that. It doesn't matter if you tried like that or not, but you need to be okay with your own trading plan. And if you don't have an entry in that specific trade setup, it's okay. There will be plenty of more trades to look for. As I mentioned before, this is not how price moves on a regular basis. Maybe 85% of the time, price actually does retrace, comes back, and it will give you the chance to actually enter the trade. So backside, what else? So what kind of confirmation bias or signals can we actually see for the backside? So yeah, basically you can have kind of a moving average crossover. So when price crosses the moving average, that can be maybe one filter, so it's showing that price is reversing. Another one could be kind of a trend line, right? You have a trend line, something like this, and then eventually when price breaks it, that could be another bias that price is about to reverse. Or another one, the one that I always use. I start using as well some of the trend lines, but this is the one that I always use. So for me, there is no chance that price wants to reverse. If there is not even, for example, if price is going higher, if price eventually wants to reverse, price will not reverse without breaking any important low. So if you don't have that low being broken, price will just carry on going higher. We may have some trade opportunities inside here in a lower time frame. Let's pretend that this is a 4-hour or 1-hour time frame move. So 1 hour, like one candle, big candle in here. Maybe on the 5 minutes or 15 minutes, you may have some trading opportunities within this level. However, if you want to trade this scale, this time frame that you are looking at, there's no chance that price is going to reverse without breaking lows. So until we actually have that low being broken, price will just carry on going higher until eventually, yes, there you go, the low is broken. Now I can start thinking about looking for sales, maybe inside here, maybe in here, or even an extra fake out, and then price will go down. But yeah, I want to see opposite levels of structure being broken. If it is to go long, I want to see a high being broken even before thinking about going longs. And if you actually just follow this kind of process, you're going to be kind of relaxed, just following what price is doing until we actually have a low being broken. There is no problem. Price, just wait for price to go higher, even higher, until eventually have that set up. And this is what I mentioned before. So if you don't know me, I'm a little bit more of a reversal trader than a trend continuation. And when I mentioned before in the beginning, when I said that backside trading is kind of a reversal setup, and that's true. However, you can also use it as a trend continuation in this aspect, right? If you keep having price respecting previous lows, this is the moment that you can actually look for the trend continuation setup, wait for price to get close to this low or to retrace, or even retest this previous level of resistance, now support, and look for the trade in there, right? So expect price to carry on, respect this low, and look for the opportunity to carry on in the same direction that price has been doing until eventually, yes, eventually we are going to have that low being broken. And maybe that's the moment that you decide, okay, from now on, I will stop looking for trend continuation setups because maybe price is about to reverse. So I will not be looking for longs anymore until then we actually have the reversal. And then, okay, we have a break of a high. And now, yes, now maybe it's an opportunity to look for longs again. After this break, you can start looking for the sales. And as price is going down and breaking goes, if you are a trend continuation trader, you can start looking for sales again all the way through. So this is the moment that you can actually implement trend continuation setups in this approach. Even though you can actually then even look for the lower time frame. Let's pretend that again, this is 1 hour time frame, maybe on the 5 minutes, 15 minutes, what looks like a trend continuation setup on 1 hour time frame on the 5 minutes. So basically what we have in here. So just this move down on the 5 minutes, it may look like this. All right, it may look like this. So then you can actually then implement the same thing that you are looking at on 1 hour or that you have been talking about on the 5 minutes, wait for that 5 or 15 minutes high to be broken. And then, yes, that can give you the trigger to look for longs on the 1 hour scale move that you are looking at. And this is a little bit how you can combine the information between the different time frames for your own trading. So yeah, so next. So actually all these, of course, all these signals and confirmations, we should actually look for them when actually price is reacting from an important level of structure, right? So most likely the reason why this may be high in here, for example, this one or this one is not is not really the zone that price is going to reverse the downside. Is maybe because the next level of important support and resistance level is actually somewhere in here, close to this highs, and that's why price eventually is going to go all the way up until it reacts to the important zone, and then yes, price is going to go down. So yeah, but this is how price moves. Price starts creating some highs closer to the zone before it actually reverses. So yeah, I would wait another filter. If you just want to wait for low to be broken before looking for sales, also wait for price to now react from maybe a supply zone or a support resistance zone, or maybe a higher time frame trend line that is coming somewhere from there, from the highs, and react from there. And then yes, that's another way to wait, another filter that you can add into this approach. So yeah, so basically this is a scenario where we actually have kind of a break of a wall, but price actually is going to create another higher high before actually reverses. And basically this is the reason that I mentioned before, that the support resistance level was actually somewhere around here, and the supply zone was in there as well. So this was still the space that price wanted to fill before actually the reversal. So yeah, this is one of the situations where it may be a little bit tricky. You may say then, or show me a few examples that, okay, price was going higher, it broke a low, but then instead of kind of retesting the high and go down, it actually continued to the upside, right? So this is one of the examples where usually you can see that happening, is when you see price this high that actually create the low or create a new lower low. It is not exactly reacting from an important level of support resistance that is in here. This is where then the final turn is going to actually happen. Okay, so this is one of the variations of this. If price actually anytime we had a break of a low, price would respect the previous high, I think that would be way easy and simple for everyone to understand, and I think everyone would already understood how the market would work if this was 100% scenario that would always happen, right? Market is a little bit trickier than that. So yeah, so this is one of the tricky situations that you can see. Actually, this information of the break of this low in here is actually really good. You can gather a lot of information when this low is broken, but that's for the future. That's for the future. That's for another webinar. So yeah, in order to actually help us to define as well when should you expect kind of this tricky situation, these are three questions that I always ask myself when I'm analyzing the market, which is basically trying to understand where is price coming from. That is basically telling me about the past, which is basically, if I look at, one second. Okay, so it will be basically asking, where is this low kind of, in this case, because price now is going higher, where is this low reacting from? Okay, on the left side, is it reacting from an important level of support resistance? Yes or no? Did it just broke an important low and then it retraced? That means give me indication that it wants to go further down, and so on and so forth. So it depends as well where this low is reacting from. That may give you the clue of eventually what price will do once it respects this important level. Another question that I like to ask is, where does price want to go? That's towards the future. So basically, if price is in here, for example, we just broke. So let's pretend that price is in here. We just broke all these highs. Basically, it opens price to go further up. So I basically know that after seeing this break of a high, I know that price wants to go higher. So that's my expectation. That's what I expect for price to do. From where it wants to go higher, that's a different question. It may go all the way down and go up, or it's just going to respect this low, or even break this low and then go up. But I'm expecting already price to go higher. And then the third question is, where is price at the moment? right? So where is price at the moment? This is focused on the present. And this is where we are going to try to answer if kind of based on the answers that we gave of where is price coming from, where does price want to go, if actually where price is at the moment is in alignment to where price wants to go. Basically, if I know that price wants to go higher, but if price is somewhere in here, maybe this is not the moment to look for the longs, because maybe price actually wants to go all the way down and it is to respect this zone. So kind of wait for price actually to come all the way down here to the next level of structure. And then yes, after I look for this long opportunity in there, that's when I'm going to try to look for the long and ride out this move to the upside. For example, if this low, as I mentioned, could be an example of breaking this low, broke another level of important structure in here. So kind of it gives me indication that it wants to go down from where. So if at the moment price is somewhere in here, maybe this is not the moment to look for the sell. Maybe in here is not the moment to look for the sell. When price finally gets in here, this is maybe the moment to look for the sell, right? And from here, yes, from here I can start selling towards then expecting price to go all the way down and even retest this low or even go further down than this low. So knowing where price is also important to understand actually if you are in a good zone to look for the trading setup based on the information that we gather, which is where price wants to go higher and where is price reacting from, is it a target or not, and so on. So this helps as well to kind of understand when should expect those different scenarios. Yeah, so together to answer these questions, zoom out and try to look at the bigger picture. By bigger picture, I mean kind of if you are looking at usually at 1 hour time frame, maybe go to the 4 hour time frame or even daily, and look left to see actually where is price reacting from and coming to. So this is actually Ethereum. Yesterday, today, or Friday, something like that. This is I took this screenshot from today, and we can basically look at it in this sense. So for example, let's pretend that you are looking for sales, for longs, I mean, after this move, this strong move to the downside, price is finally getting close to these lows in here. So it's trying to find out when should we start looking for longs? Should we just start looking for longs straight away, kind of in here, quite close to these lows? Should we start looking for longs in here? Should we start looking for longs in here or somewhere else, right? What kind of information can we gather that is actually showing us that price wants to eventually go from this bearish trend or this bearish move then to this bullish move, right? So yeah, so what kind of information that do I have? So usually a simple exercise that I think that I've mentioned before is also just like follow price, like just follow price, follow highs, follow the retrace and new low, highs, lows, highs, lows. Basically, if you just do kind of like that, you can kind of go like this up until this moment. There is no breakable lows in here. Finally, maybe we break a low somewhere in here, and in here. Maybe this will be indication that price doesn't want to go higher anymore. It wants to go down. Strong move down in here. So basically we have this small retrace in there, goes down. Price respects all these highs. In this moment in here, there's kind of a break of a new high. However, this one has been actually retested. And after that, yes, we have this low, this high, this low, and we finally have a proper break to the upside in here, right? We finally have a proper break in here. We broke this high. We just reacted from an important zone on the left side. It's actually this demand in here. So you have this first one. And after that, we can just draw the low that price is coming from. So this one in here, can even look for the demand, and that's it. So this is the first trigger that price may wants to go higher. We also have this white trend line in here. Let me just do it something like this. We have also this white trend line. This could be another trigger that I mentioned before. Kind of price respected in here, respected. It's still respected in here. Kind of draw this after the seeing maybe the break of this trend line, this bearish trend line. Maybe that could be another clue that price wants to go higher. So we could have kind of had, after the break of this high, you could have looked for longs in here. After the break of this trend line, you could be looking for maybe the retest of the trend line. It actually reacted from there quite nicely in here. And then if you missed the trade in these two zones, just wait for another break of a high. And there you go, another demand that is created in here. And this is kind of the final confirmation, or the final entry actually that you could have went long with proper confirmation that shows that price is not just going down. Actually, price is slowly breaking highs. Now it reverses, breaks another high, it retests there, and then it goes and it reverses, right? And again, important to notice that we are actually super reacting from an important zone in here, this demand level. And it's actually aligned with the low as well on the left side. So yeah, so this is a way to actually look for it with confirmation. Instead of blindly just go short or go long after this strong move down without actually a proper break of a high, right? So this is a way, two different ways to look for trade. If you compare just this high or you compare this one, how this one. Another example, it will be this one in here, right? This is actually what we had on the previous one, but now on the war time frame. Okay. So this area, it's going to be actually all this, but now on the war time frame. So this was a 30 minutes chart. This is actually a 5 minutes, right? So again, we did had all this move up, right? We did all these moves that I mentioned. So even if you are looking for for longs as well, so basically we have this strong move down, this high, move down. Yes, we did it. We broke this high, but we reacted straight away from this level. We go down again, start creating this, right? There you go, first break of a high. Maybe price wants to go higher. Maybe this could be a trigger to go long already from here. Price goes higher. It did react straight away from the next supply demand zone. So pay attention as well as price is going down and up where those zones are. Price goes down. We did had a small fake out in here. And now we have finally the break of these highs. One more time. And after this, yes, maybe it will be another trigger to start going long. Another break of a high. Another break of a high. And you can start looking for the shift. Can you see how price shifts from one side to the other? How it goes short, it starts creating some structure in here. Eventually it breaks those levels and now it's ready to go. So there is kind of a cycle, a move, a pattern that price does from going short to long. And this is actually something that you can see quite often, which is kind of what I mentioned before, that price usually doesn't really just goes down and reacts straight away and shoots away. This may happen, but usually it's hard for price, even for the institutional traders, to even fill out their orders with such a strong move or fast move. I mean, that's why then price kind of needs to go all the way back here, spend a little bit of time. It needs to fill orders. It takes time to fill orders until eventually we go to the upside. So now if we actually do the opposite and you take a look at this level now, so this is what I had before. So price goes higher, respects the low, so no indication that price wants to go down. Again, goes higher, and there you go. We have this low in here, price goes higher. We do have this important zone in there. And then price still respects it, so still no indication that price wants to go down until finally we have the break in here. And this can be the trigger. Again, price wants to go down. There you go. You can start looking for the sell. Next price, it will be close to these lows as a target. After we have actually this low being broken, the price will go and fill all this space to the downside. So yeah, so we have either opportunity to sell in here or to sell in there and close to the highs. But yeah, you have again a confirmation after the break of this level, price wants to go short. And this is what I'm trying to explain in this webinar. Wait for that confirmation, wait for price to break structure, to break lows before looking for the sell. Okay, there is no need to look for the sell immediately as price is going higher without showing any weakness. So this is the main point of it. And usually we have quite a few opportunities to actually get in on that short, either here or here, with stop loss, for example, just above the high, you can have that opportunity. And if you actually manage to get in close to these highs, you have a better opportunity for a better risk reward trade, which is another issue that most of you or many of you have, is that yes, sometimes you actually wait for this backside trade. So you actually wait for this confirmation, but you are waiting and waiting and waiting. And all of a sudden you are trying to enter already after price had already kind of in here, like a little bit wait. So you are you wait. Basically price already broke 2 or 3 lows and you are entering a little bit too late. Maybe, okay, after the break of this, let's go short in here. Basically already missing all this move. And this is another thing that maybe you guys need to try to practice a little bit more, of finding ways to actually go long or go short, in this case, closer to the extreme, not after price had already made such a move to the downside. Basically, you are starting to look for sales when price is already reacting from a good zone that most likely is going to go up before then continue to downside. So basically, you are going to look for sales in here, maybe you're stop loss in here, and then you're going to be stopped out. And then price will just carry on to the direction that you wanted, but because you are entering too late, this is no longer a good trade. So another benefit of trying to find these backside trades is to try to trade the extremes of it. You have a better risk reward, you have a better trade management to do. You are not going to be as stressed, because if you are opening trades kind of in the middle of the zone after such a move, the move has been done. After the move to downside has been done quite a while, you're going to be kind of in the middle. In the middle is when you have more indecisions, price going up and down, and this is when you don't know what to do next, right? Should I close the trade? Should I keep it? What should I do? And so on and so forth. So try to get closer to the extreme. So this was Ethereum. So Bitcoin, also a little bit similar to Ethereum. It's going up. We do have all this level of support resistance aligned in here. We have this demand in here. So it's a good level. You can see the demand. You can see how prices just shoot to the upside from here. Okay, price goes down, price goes up, price goes down. Again, first time touch. Okay, maybe you can look for the entry in here just as a first time. Like I mentioned, kind of the only benefit of looking for the front size trade, because this is a demand, and usually on the first time that the demand is going to be touched in the future. So we have this demand, price went up. The first time that price is coming back to the demand zone, usually there are still orders in here. So yeah, do expect some reaction. However, that doesn't mean that price is going to just shoot to the moon. Maybe the reaction is going to be small and then price will break it. So this is kind of the only benefit of it. However, I would rather wait to see then a high actually being broken. So we had this, price went up, price went down, price created all this move in here, and we finally have the break to the upside in here. Basically, this can be the trigger that price may want to go higher. If you are still not sure, just wait for price to come back. You can see now how price is starting to losing momentum, creating this compression that I've been mentioning as well. And you can also see this trend line in there. You can wait for the break of trend line. That's it. You can look for your long opportunity in there. Again, price is still reacting within this demand zone. So perfect, look for it. Or if you actually want to wait again for the break of a high, we do have that break in here, and we do have this demand zone in here. And this could have been all of these lows, could have been the trigger to look for the long. And again, after the break of a new high, we can kind of rejoin the move up. And this is an opportunity that it includes confirmation. This is the back side of it. This kind of, it could be the front side. This one is the back side, and you can have plenty of opportunities to go long during all this moving here. So this is a much better way to look for the opportunity rather than just kind of try to catch kind of a throwing knife and just by placing an order somewhere in there, right? So wait for that weakness, wait for that confirmation, and so on and so forth. And that is a much better way to to look for it. So this was Bitcoin as well, quite similar to Ethereum. So it was also during this weekend, today. What else do I have in here? Euro, USD. Okay, Euro dollar, for example. So this is what I usually see. All right. So this was this morning. I actually took a screenshot on purpose for you guys. So we do have this high in here, right? Price did respect it. It didn't broke it. And basically we did have this low, right? So this was the low kind of. So as price is being created and the price is moving, what you want to start doing is, okay, okay, 1 second. Okay, we have this thingy, this move, set up like twice a line to see the previous low. We have it, new one. Okay, let's bring it close. Maybe eventually you can connect all the lows if they are kind of close to each other. And then again, a new low, and you start following that low. You can basically delete this previous two because this is now the most recent one. This is basically what I did in here. So kind of, you could have, let me just change the color. We could have kind of this one, right? We have this, now this, then this. Price goes higher, pauses, we have this demand. Zone is low, price goes higher. In this case, price goes down. It didn't broke this low, right? It didn't break it. Price goes higher. It didn't break the high either, right? So it kind of, it's in this range now, right? So what can we expect here? This is the question, guys. If I want to look for shorts, what do I need to wait first to happen? Break of the low, yeah. Yeah, good. So we should expect a break of this low, right? So I would like to see euro to break this low before even give me an indication that price actually wants to go down, right? So at least the break of this low, and then maybe I will have my own strategy, my execution of, I don't know, retest of something, or just break of the low, retest of this trend of this previous support, this resistance, and go short, or I want maybe a little bit of a better risk reward, so I'll wait for a deeper retrace and to go, right? This can be, I can go into more detail about where exactly then to look for the entry, but for now, yes. So I want to see this wall being broken, right? Okay, I don't have a follow-up trade chart on euro in here, but let's just take a look and you'll see what happened on the euro. What happened? In this, right? So we did have the break of the low, some retest, and there you go. It opened the door to go down. This was compressed. This is compressed. This isn't reacted from anything important. So actually you could have just opened the door to go out. Let me just hide this first. You kind of just open the door to go all the way through to the downside. After that as well, we do break this low, more room to the downside, then you can kind of rejoin, right? And as you break another low is broken, another rejoin, until eventually you're going to react from something important on the left side, and this move is going to maybe stop and price may reverse, right? So as you can see, this is exactly what the example I showed. There you go, break, and there you go. All right. Now, for example, I took a trade in here this Friday. So let's help me. What can I expect from here? Why did I got short in here? What was the trigger for me to get short in here? Basically, we have first going higher. You have this. All right, let's go higher again. I think this one, it even breaks for a little bit these lows. And then you have this compression. I actually have another break in there. So confirmation. Second. We did had another break. This was actually the trigger, this one as well. So this is now on 1 minute. Right. This is fresh in here. And there you go. Price react from the zone. Price breaks another low. On the retest, I was short from here. That's it. Break of a low. I think this one broke it again. Yep, this one, it even breaks a little bit, this one, which is a good sign. There you go. Wait for the confirmation. I don't need to get short in here. I don't need to get short in here. Maybe in here already, there was maybe a good opportunity. But I don't need to get short in here. I don't need to get short in there. I don't need to get short in here. I can just actually wait for price to show me that is turning, that show me that is breaking lows before actually join the short to the downside. Then we have again this strong move. Price breaks out this zone, goes higher and retest from there. But yeah, right. So I don't need to start looking for sell in there. I just need to wait and wait. There's no need to look for short in there. Price respected. There's no need to look for shorts, even though it looks like price may. You can see how these sells are being placed in without these zones. There's no need. The walls are being respected. Price goes higher, another one. Price goes higher, another one. Price goes higher, another one. So it's being respected. There's no need to force sells in here because we don't have any breaks of walls. Right? That's it. Second, let me go back to this. So this was euro dollar. Yeah, so the setup was in there. There you go. Price had already gone all the way to the downside. Dollar index, similar scenario. This trend line as well. So price is respecting lows, price is breaking highs, respecting lows, breaking highs, respecting lows, until eventually we do break this trend line, we do break this something in there, and eventually price is going down. We did break this low in here. Second. We did break this low. So you can kind of look for the sell in there. You do have your sell. After that, price just breaks again, new highs. So this zone is never broken, not expecting for sales. Go higher, compression, go higher. We have this low, price goes higher, price breaks this low, and you can start looking for sales in here. Just follow price, just follow what price is doing. It's just as basic as that. Follow what price is doing. Break low. This one I think is reacting as well from a good zone on the left side. That's it. After that, price goes down. No need to look for longs in here. If you are looking for longs, there's no need. Price never break any high. So okay, we do break now. We do break this this low. Basically, price telling us it wants to go further down. Okay, price retest. There's still no break of a proper low in there. Another low broken. Again, highs, they're not being taken. Another low being broken. And this is finally the first high that is taken during the news, which is quite nice as well. This kind of shows a little bit of where price of indication. So when you finally see some high being broken, doesn't mean, as I mentioned before, that price will just do this, even though price did still respect this demand zone in here. So you could still have kind of an opportunity to trade in here and just manage your expectations. First target to be kind of retest of this supply zone, and you still have a good risk reward in here at least 2-1. But then eventually this zone is broken. This was the demand that price eventually reacted from. Price goes down, goes down, goes down. Is this really a break of a high? Maybe. We do have this compression now. Again, you can use compression. You can use these trend lines or just break of lows to eventually see price. Okay. Okay. So in this case, we do have kind of the double scenario. We do have price breaking this trend line, price breaking this high, and there you go. Shift is done, break of another high, and there you go. right? You can start looking for longs after the break of this trend line, after the break of this high, look for longs. Before that, there's no need, just wait for price to give you the information of what it wants to do. Simple as that. Just follow what price is doing. And then combine this with where are the important higher time frame levels of support resistance, where are those trend lines, and then yes, matches your bias, whatever bias you have. If you think dollar is going to go up, down, whatever, wait for price to give you that information and then join the move that you are expecting to. There's no need to have FOMO. There's no need to start looking for the long before actually price breaks a high. There's no need for all of that. Price eventually, just need to be patient. Price eventually is going to give us that information. And you can look for it on the 1 hour, on the 4 hour, and then even go down to the 5 minutes and so on, just as I showed before. Okay, so basically conclusion, yeah, wait for confirmation before executing the trade. It will definitely increase your winning ratio. And if you actually manage to catch that trade a little bit closer to the extreme, for example, I know that Rocio, it's good at identifying that trend, but then she's a little bit late for the execution. She waits too much for the confirmation, and then she enters already in the middle of the zone, which doesn't make it such a good trade anymore. So yeah, aside from waiting for that confirmation, try to catch the move a little bit closer to the extreme. And then yes, even if you have a bias, which is good, but I know that Steven has been trying to get long on oil over and over and over again, you can have your bias, but then just wait a little bit for actually for price to show you that that's about to reverse. So yeah, this is something that I usually like to say. Price will show us the way or tell us where it wants to go. We just actually need to find the clues or pay attention to what price is saying or telling us. So yeah, I would like it to challenge you to find examples of this. Just follow the highs, lows, wait for the break. Just show me a few examples to get used to finding these opportunities, these setups. If you find them close to important levels of support and resistance or trend lines or whatever, they're quite nicely. That's exactly where you want to find them. And actually you can start being even more aggressive when price is actually reacting from those levels. So kind of be cautious if price is not exactly reacting from an important zone. For example, if the high is not actually reacting from an important next zone of maybe resistance, be a little bit more cautious. But if price actually is reacting from that zone, okay, you can be a little bit more aggressive. By aggressive, I mean be more aggressive looking for that break of a low. Like after the break of a low, okay, try to maybe join the trade. So yeah, basically that was it. Any further questions just before we move out? Any questions, guys? That's it, guys. Thank you for joining. I hope it was beneficial. Thank you. Bye bye. See you tomorrow, guys.